All right, let's talk about crypto news. You know how it is. You see a headline and it's packed with all this jargon that feels like it's designed to go right over your head. Well, today we're going to do something about that. We're taking just one of those headlines, we're going to pull it apart piece by piece and figure out what is really going on.
So let's start with this one. It's straight from the financial newswire, and it sounds pretty intense, right? You've got whale, dumping, flatlining. These are some heavy words, and they're definitely meant to make you feel like something huge is happening.
And that's the real question, isn't it? What is actually going on behind this wall of confusing words? Well, we're about to find out together. And I promise, by the time we're done here, this is all going to make perfect sense.
Okay, first things first, we've got to decode the lingo. To really get the story behind the headline, you got to speak the language. So let's start with those two key terms, whale and dumping.
So what in the world is a Bitcoin whale? Honestly, it's pretty much what it sounds like. Just picture a gigantic whale in a tiny little pond. Every single time it moves, it creates these massive waves that just toss all the smaller fish around. In the world of crypto, a whale is an account with so much Bitcoin that when they decide to buy or sell, that one single move can actually change the price for everybody else.
And what about dumping? Now, this is not just somebody casually selling a few coins. Dumping is aggressive. It's a huge sell-off. It's the act of flooding the market with a ton of an asset, usually because you want to get out and you want to get out fast. It's a big market-shaking moment.
And to really get it, just look at the difference in scale here. It's absolutely staggering. A retail investor, maybe somebody like you or me, we might be moving thousands of dollars. A whale? They're moving billions. We follow the market trends. They can literally create them. Our trades are anonymous. Theirs make international news.
All right, so now we know what a whale is and what a dump is. So let's get some context. Let's look at the market environment when this whole thing went down. Because believe me, with crypto, context is everything.
So this was the price of one single Bitcoin right when the news broke. Just a little over $115,000. And remember, the headline called the price flatlining, which basically means it was kind of stuck, not really going up or down. The water was calm until this whale decided to make a splash.
And what the reporting shows us is that this wasn't just some sudden random move. Not at all. It was part of a bigger pattern. Just 2 weeks before this, the very same whale swapped an incredible $4 billion worth of Bitcoin for Ether. Then, on September 14th, they start the dump that ends up in the headline. And by the next day, you could already see the ripple effect as the price started to dip. This wasn't just one action. It was the latest move in a much bigger game.
And you've got to remember, this wasn't happening in a vacuum. I mean, just look at the other headlines flying around at the exact same time. You've got talk of crashes, altcoins going nuts, people in Thailand dealing with frozen bank accounts. It's a chaotic, volatile, and really noisy market out there. This whale's big move is just one massive event in a whole sea of financial drama.
Okay, so we've got the lingo, we've got the context, but why should we care, right? Why does the action of one anonymous, super rich player actually matter to the average person who's just interested in crypto?
Well, it all comes down to a chain reaction. It starts when the whale just unloads billions of dollars of Bitcoin onto the market. All of a sudden, there's way more supply than there is demand, and that just overwhelms all the buyers. So to sell that huge amount quickly, the price has to be pushed lower. And then, when other investors see that sudden drop, what happens? They might panic. They start selling too, which just amplifies the whole effect and pushes the price down even further.
So here's the bottom line. In a market that's this interconnected, one single person's decision to sell can have a direct financial impact on millions of smaller investors all over the world. The value of what they own can change in an instant, not because of some big shift in the technology, but just because one giant player decided it was time to cash out.
And that leaves us with this one last kind of provocative question. Crypto was built on this big idea of decentralization, a system with no central bank, no single authority, where power is spread out. But when one single anonymous whale can make billion-dollar waves that rock the entire pond, what does that really mean for the future of that decentralized dream?